Good morning and welcome to the Killik and Co market update. One of the biggest events this week was the outage at Amazon Web Services, or AWS, which is Amazon's cloud computing division. The outage really highlighted just how many other major companies are dependent on Amazon's cloud. For example, Zoom, Spotify, Snapchat, HMRC, and Lloyds Banking Group. The outage was resolved fairly quickly and the share price was actually up at the end of the day. Here's the one-year chart, and perhaps that's because the incident highlighted just how big and important AWS is. Here are the current market shares in the global cloud services market. AWS is right at the top there with a market share of nearly 1/3. Azure is number 2, that's owned by Microsoft, and then we have Google Cloud in 3rd place. Many still view Amazon as an online retailer rather than a cloud provider. It's true that most of Amazon's revenue comes from retail. Here's the revenue breakdown for each of the last 10 years. Online store revenue is shown by the dark green, and then there's also the revenue from third-party sellers in bright green. AWS revenue in the bright pink is a fairly small proportion, around about 17%. However, while AWS only accounts for 17% of revenue, it accounts for about 58% of Amazon's profit. And next up, we've had a good performance from UK markets this week after the latest inflation data came out. There have been concerns about UK inflation being on the rise, but we've now had 3 straight months of it staying the same. Here's the data for the last year. It's now been at 3.8% since July. Although it's still above that target of 2%, the latest figure was expected to be 3.9%, so the actual figure of 3.8% was a pleasant surprise. As a result, it's more likely that interest rates in the UK will now go down. We can see this reflected in the bond markets. Here's the yield on the UK 2-year government bond and how this yield has changed over the last year. That recent decline suggests an expectation that interest rates will go down. Lower interest rates tend to be good news for equities. We saw a rise in the UK's FTSE 250 index this week. This is the UK's mid-cap index, and it's more exposed to the UK economy than the FTSE 100 index, which contains more big international companies. This is a 5-year chart, and despite the recent rise, you can see that the index is still below that 2021 peak. The appetite for investing in smaller and medium-sized companies dropped in 2022 when interest rates went up, and that appetite has yet to recover. This prospect of lower interest rates is also good news for the UK government. The latest UK government borrowing figures came out this week, and they showed the highest level of September borrowing for 5 years. On this chart, the dark green columns show the cumulative level of borrowing throughout the last financial year, and the bright green show the cumulative level of borrowing for this financial year. You can see that this year is ahead. The pink line shows the level of borrowing predicted by the OBR. Now that bond yields have gone down, the government will have to pay less interest on new borrowing, and that's good news for the UK's public finances. And lastly this week, the US has announced new sanctions on Russian oil companies Rosneft and Lukoil. The US is frustrated that India and China are still buying so much Russian oil, and that is effectively financing the war in Ukraine. Here's a chart that we've shown previously, the breakdown of the countries that Russia's oil exports are going to. India is shown by the yellow. It was buying hardly any Russian oil in 2021, but in 2024 it accounted for a significant proportion. Following the new sanctions announcements, big oil refineries in India and China have reduced their purchases of Russian oil. This has caused a rise in the oil price. Here it is over the past year. It's up over 7% this week. As expected, we've seen a corresponding rise in the share prices of oil companies on the anticipation of higher profits. Here are BP and Shell over the last 12 months. Moving on to have a look at next week, it's a big one for the Magnificent Seven, and we are expecting results out from Amazon, Microsoft, and Alphabet. That's it from us. Enjoy the weekend, and we'll see you next Friday.